Hello student, how are you? I am fine. I am Mr. Puka Watitu Augustine. Welcome to Cost Accounting. Our lesson today is an introduction to cost accounting. Welcome. By the end of the lesson, you should be able to define terms used in cost accounting, identify role of cost accounting in management, describe the scope of cost accounting, differentiate between cost accounting and financial accounting. Now, let's look at definition of term, and the first term we have cost. Yes, student, what is cost? Cost refers to quantification or measurement of the economic sacrifice made to achieve a given objective. Another term is cost accounting. Cost accounting is a field of accounting that measures, record, and report information about costs. Another term that we have is cost object or cost unit. Cost object is an activity for which a separate measure of cost is desired. Another term is cost accountant. Cost accountant is a member of the accounting department responsible for collecting product costs and preparing accurate and timely reports to evaluate and control company operations. Another term is cost analysis, and this is an activity that uses engineering, time and motion studies, timekeepers record and planning schedules from production supervisors. The last term is cost center, and this is a point at which costs are gathered in order to control cost, fix responsibility, and enable costs to be recharged on an equitable basis. Now, let's look at role of cost accounting in management. The role of cost accounting in management include 1. For accounting of costs, 2. For planning and budgeting, 3. For control of the operation of the enterprise, 4. For decision making, 5. For resource allocation decision, and lastly, number 6 is for performance evaluation. Now, let's also look at the scope of cost accounting. The scope of cost accounting. As part of their jobs, cost accountants interpret results, report them to management, and provide analysis that assist decision making in the following departments. And the first department is manufacturing department. Cost accountant work closely with production personnel to measure and report manufacturing costs. The efficiency of the production departments in scheduling and transforming material into finished units is evaluated for improvement. Another department is engineering. Cost accountant and engineers translate specification for new products and estimated costs. By comparing estimated costs with projected sales prices, they help management decide whether manufacturing a product will be profitable. Another department is system design. Cost accountants are becoming more involved in designing computer-integrated manufacturing systems and databases corresponding to cost accounting needs. The idea is for cost accountants, engineers, and system designers to develop a flexible production process responding swiftly to market needs. Another department is treasury. The treasurer uses budget and related accounting reports developed by cost accountants to forecast cash and working capital requirements. Detailed cash reports indicates where there are excess funds to invest or where cash deficit exists and need to be financed. Another department is a financial accounting. Cost accountants work closely with financial accountant who uses cost information in valuing inventory for external reporting and income determination purposes. Another department we have marketing. Marketing involves the cost accountant during the product innovation stage, the manufacturing planning stage, and the sales processes. The marketing department develops sales forecasts to facilitate preparing a product manufacturing schedule. Cost estimates, competition, supply, demand, environmental influence, and the state of technology determines the sales price that the product will be offered and will command in the market. The last department that we are looking at is personnel, and the personnel department administers the wage rate and the pay method used in calculating each employee's pay. This department maintains adequate labor records for legal and cost analysis purpose. Now, let's look at the comparison between cost accounting and financial accounting. Yes, students, what are the differences between cost accounting and financial accounting that you know? The first difference is that cost accounting is not governed by any principle or concepts, while on the other hand, financial accounting is highly regulated and governed by the general accepted accounting principle. The second difference is that cost accounting is not mandatory or compulsory. The management may practice it or not, while financial management is statutory requirement. It's a mandatory. It's required by law. The third difference is that cost accounting looks at segments of the organization and the organization as a whole, but financial accounting looks at the organization as a whole. It is less concerned with segmental performance. Another difference is that cost accounting is futuristic, but financial accounting is historical, in that it reports what has already taken place. The fifth difference is that cost accounting places less emphasis on precision and more emphasis on non-monetary data, while financial accounting places more emphasis on monetary data and precision. Another difference is that cost accounting draws heavily from other disciplines such as economics, finance, statistics, and operation research, while financial accounting draws little or no from any other discipline. It is governed by the statutory and generally accepted accounting principle. Another difference is that cost accounting provides data for internal use by management, while financial accounting provides data for both internal and external uses. The last difference is that cost accounting emphasizes the relevance and flexibility on data, while financial accounting emphasizes more on objectivity and verifiability. In summary, there is no watertight definition of cost accounting. Chartered Institute of Management Accountants define cost accounting as that part of management accounting which establishes budgets, standard costs, actual cost of operation, processes, department or product, and the analysis of variances, profitability, or social use of funds. Cost accounting is broad and extends beyond calculating production cost for inventory valuation, which government reporting requirements legally dictate. Cost accounting is applicable in types of activities, manufacturing and non-manufacturing, in which monetary value is involved. It enhances efficiency operation in various sectors. This is the end of our first chapter, which is an introduction to cost accounting.